Welcome back, everybody. Thank you so much for watching another video. Today we have a special treat for you, and I did a slight mention on my previous videos, and this is very proper now in this month of April, which is Financial Literacy Month. So I wanted to give you and bring you always pertinent information, proper information for you business owners. Yes, certified public accountant,
Go ahead.
wealth generator, Ignatius L. Jackson.
Yeah, thanks for having me. Happy to be here. This is a exciting time, like you said, in the marketplace, also for Financial Literacy Month. So happy to chat about some things with you, and to the extent that people, want some additional assistance or have some questions and whatnot, by all means, send them our way, and we'll do what we can to answer those for you and give you some good advice. But yeah, it's I've been a CPA for let's see, since 2012, and I just have really enjoyed what I do, and really love helping small business owners to thrive and to build generational wealth and really support their families in a way that saves them money on taxes while at the same time investing in and growing their financial acumen. So this is a great opportunity, and happy to be here.
Absolutely. Thank you so much. And I've been slightly mentioning you in some of my videos, and one of the reasons why I didn't want to give too much away is because I know you and I have been talking about slightly about one day having this interview, because I know that a lot of our business owners in our audience will benefit from this, and I cannot stretch enough the the importance of having a professional person taking care of your taxes, as well as advising you financially where to invest your money. So that's very crucial. And given the latest um, events where you helped me set up an IRA, not only that, now I feel kind of like I'm a little bit richer, because I know that at the end of the day, I'm going to have some money to retire. We focus so much in what we're generating today. And a lot of us business owners, we're so busy heads down working that we don't have time to really think in the future and put some money aside. And I think you're going to give us more numbers in terms of how many people, or they're retiring with a zero balance bank account, sometimes a negative balance bank account. And I really appreciate that you took the time to really advise me on investment. Not only that, but you helped me to get approved for my PPP loan without spending thousands of dollars like some people charging out there. You helped me really save money on taxes on my business, and I cannot tell you how well I sleep at night, because there's nothing that I fear more than the IRS.
That's most people. That's most people. They really do fear the IRS. And at the end of the day, and you're learning this, after working with me, you really shouldn't be afraid of the IRS. As long as you kind of follow the rules and you know what you're doing, then you should be fine. And there's not really a need to run scared. And like you said, with the PPP loans, that's a great resource for small business owners. If you have a business and you were in business by February 15th of 2020, you likely qualify for a PPP loan, especially if you're a Schedule C filer. Okay, so what that means is you file your business taxes along with your personal taxes. So if you are one of those individuals that has a business like that, definitely go and apply. They changed the rules to where you can apply now using your gross income instead of just your net income. So a lot of great opportunity there. Highly recommend people take advantage of that. Now, in terms of what we did for your retirement for the IRA contribution, that's key. Doing the IRA contribution is awesome. Now, your situation involved, we ended up doing a IRA contribution to get you actually below threshold so that we get you the full stimulus payment. Um, so there's some strategies around doing stimulus payments to where you can take certain deductions that reduces your income to your adjusted gross income to a level that you qualify for the full stimulus, whereas you may not have gotten the stimulus payment otherwise. So there's definitely ways that we can strategize with you to plan and attack that. And not only that, not only just short term for the stimulus, but also long term, you're really going to be able to, take care of the wealth of your family and take care of your family, and hopefully retire one day. That's the ultimate goal, right? So
So I'm telling you that's why it's like we try to be experts in all areas on our lives, and that's not how the wealthy think. The wealthy think in a way that they specialize in their craft, what they're professionals at, and then they have people really taking care of other things, other professionals. So if I'm not a professional in filing taxes, and this is the one of the mistakes that a lot of us business owners make, is that we want to do our taxes ourselves. We want to get into it. We want to get these softwares. And hey, look, you may very well file your taxes correctly. We're not saying that you're going to have any issues, but Ignatius, just correct me if I'm wrong. And when I told you that I sleep well at night, knowing that I have a professional, so when you have that professional stamp, that CPA stamp on your filing your taxes, I'm not saying it's 100% impossible for you to get audited, but you are less likely to get audited.
um, you can, well, that's not entirely true. You can still get audited with the CPA's name on the bottom of it,
I
but
mean,
what it
especially if
does,
I'm sorry, especially if you're doing something wrong, you
yeah,
will get audited.
yeah, but what it does is it actually gives you a leg up because
Yeah.
when they do see that you have that name at the bottom of the return, then they know that you had at least some good advice and from someone, hopefully. Not all CPAs are actually giving good advice. I'll be honest. There's some that end up in jail and in prison because they're doing crappy stuff. But yeah, generally speaking, if they see that name at the bottom of the return, they're going to give it a little more credence and give you the benefit of the doubt that there's an explanation for something or you did it for a reason, and then you just have to prove it. But there's a chance you could still get audited. But one of the keys to reducing your audit risk is actually what a lot of people don't do, which is, first of all, stop paying too much to the government ahead of time. When you get a refund, you're giving the government an interest-free loan. Stop it. All right. Don't do that. You don't want to plan on having a refund every year. You want to plan on owing a little bit every year, because if you do it that way, now you're not in a rush to file your return to get your refund. And if you're not in a rush to file your return, guess what? Now you can do an extension and file later in the year. The later you file in the year, the lower your audit risk. Okay. The reason being is, over the summer time period, once most of the returns are already filed, because most people do not do extensions for whatever reason. They think extensions are bad. That means they're going to get audited or whatever. That's false. That's incorrect. It's actually the reverse. Okay. You're decreasing audit risk because they do these random audit selections over the summertime period. And then after, that time period's over, really the only way you're going to get picked is if you have something odd that stands out on your return. So something that just doesn't look right and they want to question it. And also, don't think that when they audit you, they're auditing every single number. Usually it's just going to be a single number or maybe a couple numbers that are on your return where they're like, this doesn't quite make sense. Let's ask a question. They're just asking you about those numbers. They're not necessarily asking you about your entire tax return. So that's like a colonoscopy where they don't have time to do those. Okay. We're just doing more like a mammogram. We're just doing a little, touch just to feel and see what's going on, testing the waters a little bit. And if they find something wrong, then they might open up the rest of your tax return and start looking at other stuff. but usually it's just going to be a couple numbers on there.
And that's so important. Look, this is how I envision the audits. Three, four, five guys with black suits and dark glasses with suitcases knocking on my door.
No, it's not that serious at all. In fact, most of the time they don't even come to you personally. Most of the time they just send you a letter in the mail and say, hey, we're questioning this, send us evidence or proof. You send it back, you're usually done.
On
So
that note, Ignatius, so on that note, what are, I don't know, three or five things that you will advise to business owners? One, and this is in regards to writing off stuff. You know that we business owners, we're big in writing stuff off. What are two or three things that you can debunk? They're complete myths. And what are two or three things that you can advise small business owners to always do to get the maximum write-offs?
Um, well, a few things would be writing off your home office or taking a mileage deduction, stuff like that is going to get you audited. Not necessarily. All right. As long as it's reasonable and in line with your nature of your business, that's not going to mean that you're going to get audited because a ton of business tax returns take those deductions. And they don't, if you don't know, less than 1% of all tax returns are audited every year. Less than 1%. That's negligible. Okay. It's not something to be overly concerned with. Even when you see this news article that says IRS is going to audit twice as many tax returns. Well, if they were only auditing less than 1% to begin with, that's still not anything to be really worried about. Let's be honest. So those are the things, those are some myths that are out there that I'm like, don't worry about those. If you qualify, if you use your home office, if you have good mileage logs, take those deductions. They're very beneficial and super powerful. What was the second part of your question?
Yeah, the demystifying, the debunking, and the advices on what to write off.
What to write off? Okay, yeah. So they're kind of one and the same in a sense. I mean, same at the same time, I see a lot of returns that don't take those because they're afraid of them. Take advantage of them. All right. If you have a home office, like you're probably in your home office there, right?
Right.
Okay. You're doing work. You do this YouTube channel. That's
Yep.
a completely legitimate tax deduction. All right. So yeah, you have to kind of take advantage of the things that are available to you and use the code in your favor. Like you said, putting some of your everyday personal items into your business. If you're legitimately using them for business purposes, there's tons of ways you can do it. But don't go so crazy to like write off your whole house or go buy a car and it's your only car and write off the whole car. That's where they're going to catch you. All right. If you only have one car and you're saying you don't use it for personal use at all, that's not going to fly. So, stuff like that. That's where you got to be careful. As long as you're considerate of it, you'll be fine.
Yeah, and a lot of us, we also want to trick the system. And I want to switch gear here because I know we're about to wrap up. I want to talk a little bit about investment because, again, this has been a huge thing that you have done for me and my family. Before, I thought that in order for you to have an IRA contribution account, a Roth IRA account, you have to, put $100,000, $200,000. That's the right. It would be good to put that amount. But I'm saying is that for small business owners, you don't have to put that big of amount. So I'm going to post the link here where Ignatius breaks down and talks about how much you can contribute to your IRA. You always also you show a calculator of how much you will retire with if you put certain amount. Would you speak a little bit about the types of investment that you can do?
Absolutely, yeah. So you can put up to $6,000 per year into an IRA account. My recommendation 9 times out of 10 is that you make that a Roth IRA. Okay. And don't give me the excuse that you make too much money because that's a fallacy. Anyone can put money into a Roth IRA and there's ways to do it. It's called the backdoor Roth IRA strategy. And there's ways to do it. Even as a business owner, guess what? You could even put more than $6,000 into a Roth IRA every year using what we call a mega backdoor Roth IRA strategy. So there's tons of ways you can get money into your retirement account. Okay. Now that said, let's say you don't have $6,000 to put in. Here's the power of what we call compounding interest, and that's the video you're talking about. Let's just say, for example, that, and this is important, you have to start early. If you start early, you don't have to put nearly as much away. If you start late, you have to put tons away just to get to your goals. So in this scenario, all right, I said $200 a month. That's it, just $200 a month over 40 years with an average return of 10%. That's fairly doable, okay? Compounding monthly, it gets you to 1.275 million at the end of 40 years. You're a millionaire. And all you did was put away $200 a month. We spend $200 a month on completely frivolous things that we don't really need. Going out to dinner, going to buy the new pair of Jordans.
Starbucks for
Starbucks. I mean, there's so many things you spend $200 a month on that's just ridiculous. So if you started at 20, putting $200 a month into a Roth IRA, by the time you're 60, which is when most people want to start to think about retiring, you have 1.275 million. And the more and more you put in over that time period, the larger those numbers get. You could be a multi-millionaire, okay? So that's the key. That's the power of compounding interest. That's the power of investing and growing your money, is it will work for you. And guess what you did to do all this? Absolutely nothing. You just put the money into an account. And there's so many accounts out there. I gave you an example today of one called Titan Invest. It's something that I found recently that I've been doing. They're averaging like 20 to 30% returns. So the 10% I'm talking about are even better. So, I mean, there's certain things that you can do to grow that even faster. We're not going to get into that today. I'm sure you'll bring me back on and talk some more about some of that stuff. But there's a lot of awesome strategies that you can put into place that's going to really just steamroll this amount. And instead of getting 10%, you can get 20%, 30% annually, and really just grow that stockpile.
That is incredible, man. And again, I'm so thankful that you got to put me on that. Otherwise, I wouldn't have done it. And, for some of us and some of you guys that you thought like me that you had to put an exuberant amount of money, that's not the case. This example is perfectly like in place when you put only $200 a month, every year for 30, 20 years, and you retire a millionaire. That is better than you retiring to a old folks home because you don't have where to go, guys. Think about it.
And let me just say, don't count on Social Security. If you're our ages, in your 30s, don't count on Social Security. I'm sorry, it's not going to happen. If you're already 50 or 60, okay, you'll probably be able to count on some Social Security. So maybe your number is not quite as high, but the younger generation, don't be counting on Social Security. This is essential and very key. Last point I wanted to make.
Thank you so much.
So stay tuned to my channel as well. Like he said, he's going to put the link in there. We got some awesome giveaways and some stuff like that. So check it out.
Absolutely. I'm going to post the link below, and I'm going to post it here as well. So you can check out Ignatius' channel. He goes over a lot of good information in that channel, guys. Go check it out. If you want to learn about tax information, investments, and stuff like that, I'm going to also post his contact information, his email, down in the description below if you want to reach out to him. He's my personal, professional, tax professional. He's helped my family and as well as my business, guys. So get on that. Don't wait until later to do these things. Do it now that you can. And that's all I have to say. Happy Financial Literacy Month, guys. Thank you, Ignatius. Anything that you want to wrap up with?
No, just thanks for having me. Excited to share with you guys. Hope everybody can, if you haven't started one already, you go out and start some type of an account and start investing in yourself. Hashtag pay yourself first. All right. Remember that. Hashtag pay yourself first. That might be my next shirt. I don't know.
There you go. If you have any questions, guys, feel free to either reach out to Ignatius on the email that I'm going to post below, or go to his channel, show some love, and I'll see you guys later. Thanks. Peace.
quiere tocar. Me dice que me quiere amar, solamente quiere jugar. Me dice que lo quiere tocar, sé que tú te quieres tocar. Me dice que me quiere amar, solamente quiere jugar.